The IRS has a legal mechanism that allows you to settle your tax debt for less than you actually owe. It is called an offer in compromise, but the procedure to secure one is entirely unforgiving. By the end of this protocol, you will have assembled a flawless, ready-to-mail application package designed to pass their initial screening. Before you fill out a single form, you must meet two absolute conditions. You must have filed all legally required tax returns, and you cannot be in an open bankruptcy proceeding. If you violate either of these, your application fails before it is even read. Your next step is the IRS Offer in Compromise Pre-Qualifier tool. You can access it by scanning this code. Checking your eligibility here is the only way to ensure you don't waste hours on complex paperwork, only to have the government immediately seize your non-refundable application fee upon an instant rejection. If you qualify, you move to the first major hurdle, Form 433. This is the diagnostic tool the IRS uses to calculate your reasonable collection potential, the maximum amount they believe they can collect from you. You need to select the correct version. Form 433A is strictly for individuals and sole proprietors. Form 433B is for corporations and partnerships. Whichever form you use, it will interrogate your finances across three strict zones: your current assets, your monthly income, and your allowable living expenses. Many applicants fail right here. They fill out the numbers, but they forget that the IRS requires absolute evidentiary proof for every claim you make. You must attach photocopies to back up your math. This means providing your 3 most recent months of bank statements, your latest pay stubs, and current statements showing your vehicle loan balances. Without that photocopied proof, the IRS treats the numbers on your Form 433 as fiction. Your offer will be dismissed immediately. Once you complete the assets, income, and expense calculations on Form 433, the final equation will generate your minimum required offer amount. To pay that final number, choose between two pathways. The lump sum path requires 20% upfront and the balance paid within 5 months. The periodic payment path requires the first payment immediately, followed by monthly installments for up to 24 months. There is an exception. If you look at Form 656, you will find the Low Income Certification section. If your household size and income fall below their listed thresholds, you qualify for a waiver. Qualifying for this waiver eliminates the requirement to send the application fee or any initial offer payments, removing the immediate financial risk of applying. Now we move to Form 656. This is the actual binding legal contract that settles your specific tax debt with the United States government. You must input the exact tax years you owe, check the box for the payment pathway you chose earlier, and execute a physical signature at the bottom. With the paperwork complete, you must assemble the physical submission package. The stacking order of these documents matters for processing efficiency. Place your signed Form 656 right on top. Beneath it, place your completed Form 433, followed by the entire stack of your supporting photocopies. Your final step is attaching your payments. Unless you qualified for the low-income waiver, you must write 2 strictly separate checks, one for the $205 application fee and one for your initial offer payment. Combining the fee and the payment into a single check triggers an automatic processing failure, invalidating your otherwise perfect package. Make a complete duplicate of your entire packet for your records, and then mail the original to your designated IRS center or upload it digitally through your online account. Be aware of the most dangerous part of this process. Getting your offer accepted is not the final step. Acceptance triggers the 5-year probationary period. For the next 60 months, you have an absolute mandate to file all future tax returns on time and pay all new taxes exactly when they are due. If you miss a single filing deadline or come up short on a new tax payment during this probation, your offer in compromise is instantly revoked. Your original full tax debt returns and all previous penalties and interest are retroactively applied. Final financial freedom only arrives once the 5-year probationary period is officially complete.